Hello my lovelies, welcome back to my YouTube channel. If you're just joining us for the first time, my name is Faith. Here we talk about current trends and general life principles. So today we'll be talking about expense management. I know a lot of people want to learn about having more sources of income, but maybe we'll be discussing that in another video. But for today, let's learn about how to manage our expenses properly. So here are the ways I manage my expenses. So number one on my list is bulk buying. I buy my stuff in bulk because I have this deep freezer that I got last year. It was really a good financial decision. I buy my protein, such as my chicken, turkey, fish, different stuffs, and I store it in the freezer. Even down to pepper or other ingredients, I store them in the freezer. So it's really useful. You know, growing up, I saw my parents, they were always buying stuffs in bulk, and I thought this was big man decision, big man lifestyle to be buying stuff in bulk. But no, bulk buying should be everybody's lifestyle if you can afford it. Also, I appreciate the fact that not everybody are in the location where they have constant light. But if you're in any of the locations that have constant light, you may want to get deep freezer and start buying your stuff in bulk, because it helps you bargain for prices. It gives you good bargain for prices. Number two on my list is to minimize or stop impulse buying. Yes. I know some people watching this video already are saying, Faith, you are advising us against impulse buying. You are the chief servant of impulse buying. Yeah, I know I love to buy stuff at the spots. I just get anything I like at that moment. But in December 2024, I decided that I was not going to I was going to minimize my impulse buying, especially for January and February, to see how my finances would get better if I cut down my impulse buying. And trust me, it was really amazing. It had a great impact on my finance. For example, in December 2024, that's last year December, I went to shopping with my friend. I followed her because she wanted to get some stuff for herself. And when we got to Stratford, we saw different shops that had discounts. And trust me, I would have gotten some stuff because of the discount. But I was so disciplined that I said no, I was not going to get those stuff because I'd already committed to myself that no impulse buying for January and February at the minimum. And it worked, because for most of my expenses, most times when I spend on impulse buying, I tend to not have so much at the end of the month. But when I cut down those expenses, I had so much left at the end of the month, even after taking out money for my investment. So yes, this is your call to either minimize your impulse buying or stop it for some months. This is not to say you're not going to take yourself out for shopping or any stuff you like, but just be more cautious, be more intentional about how you spend your money. Don't just spend it on impromptu matters. So what I would advise is, instead of doing impulse buying, take away the IM, that's the IM. Pause and reflect. Do you really need this item you want to get? You know, the utility we get from buying stuff at the go only diminishes immediately we've bought that stuff. Say for example, if I need a sneakers, or I need a perfume, or I need a handbag, and I get it immediately, after I've gotten it and I've worn it for once or twice, because it's mine, it feels less important. So just take a pause and say, do you really need this item you want to get? And you would really see your finances get balanced. Your expenses would be in check. Number three on my list is what we call mental accounting in finance. So it is the act of segregating money for different purposes. So in this scenario, this is how we are going to apply it. So for me, when I get my pay for each month, because you tend to want to spend the whole money, I tend to want to spend the whole money if it is in my account. So what I simply do is to transfer some money out for different purposes. Say for example, I have my Oyster card. So Oyster card is the transportation card we use in London. So it could take up to £90 at a go. So I just load £90 in it, and I'm sure that my transportation is covered. With that, the remaining balance in my account is a little bit reduced, and I would be more conscious of the expenses I'm making. But you know, if you have everything in your account, you would think you still have money, whereas your transportation might be affected. So if you have your Oyster card, always ensure you top it at the end of each month or during your payday, and you know that your transportation is covered. Also, I have this Asda shopping card that I use. I try to like take out money from it, transfer money to it, so that I know that my grocery shopping are also covered for the month. Say for example, if I want to like buy any stuff, instead of using my ATM card, I just use my Asda shopping card and I'm fine. So try as much as possible to separate your money from your bank account. You could just split it to your transportation account or your shopping account, because the more you see huge amount of money in your bank account, you are always tempted or triggered to want to spend money. And that's one of the reasons why people spend money early when they get their paycheck compared to the end of the month. So always try as much as possible at the beginning of the month to split your money to different buckets, and you should be fine with managing your expenses. So that brings me to my next point, getting good bargains. You should try as much as possible to locate any stores around you and check their prices to know that you are getting value for money. This does not mean that you should walk 10 miles or thereabouts because you are looking for cheap products. No, but within your vicinity, just ensure that you are getting stuffs, buying stuffs for what the actual amount should be, and not at an outrageous price. And also, maybe like for those people that make their hair or have different activities that they do and they tend to pay money, you could also just source around for people that make it better with less prices. So these are also ways to minimize your expenses. The next on my list is credit card. Credit cards are good, yes, because they are a good source of finance, but if you don't manage them rightly, they can ruin somebody with interest rates all over. So I read somewhere that to have a good credit card management, ensure that the limit you have on your credit card, you don't spend up to 25% of it. So what that simply means is, for example, if you have, say, about 4,000 credit limit in your credit card, ensure you don't spend up to 25%, which is 1,000, because, my dear, before you start paying back, it might be difficult. It is free money, free interest, but do not get carried away. Try and manage how you tap under your credit card. Now, this is how I keep myself in check when I use my credit card. What I do is to ensure that I don't buy something that I cannot pay at the spot using my own normal ATM card, or I'm not able to pay at most within 1 month. So ask yourself before you make that payment for any stuff you want to buy, are you able to pay it cash with your ATM card, or are you also able to pay it at most in a month's time? So these are the ways you would get your expenses in check, because you don't want to start paying different interest rates on credit cards, and you don't want to have a bad credit rating. So number 6 on the rule is the 10 times rule. I was privileged to have a conversation with one of the partners in Big Four Nigeria, and one thing he said to me, in this era of cars where we have the Lamborghini and the rest of it trending currently, he said to me that, did you see my car parked downstairs? And I was like, no, I can't remember the name of the car because I'm not big on cars. But when he mentioned the name, like it was a big name, but I can't remember. So he said some of the guys, that's the consulting guys in the firm at that moment, were always like hyping him, saying that they also want to get this. But that what people don't realize is that before he bought that car, that he ensured that he was able to financially get it 10 times before buying one. Do you understand? So that car you see, he is able to like get it 10 times. So compared to some of us that all our savings is just to get that stuff, and if that stuff crashes, that's the end of it. We'll start from square one again. He said one of his financial principles is to buy stuff that he could do 10 times better. Say for instance, ask yourself, that latest iPhone you want to use, that iPad you want to use, that car you want to get, if anything happens, can you replace it 10 times? So before you buy one, try as much as possible to ask yourself, am I able to buy 10 of this immediately, for you to like be justifiable that you could buy one for yourself. So this is not to say that landed properties or buildings or anything, you have to wait till you can achieve 10 times of it. No. But you see all these movable items that can get stolen, like for example, cars. Cars are assets on the book, but they're not assets like asset, except you're using it for rental income. Phones are not assets. Well, I'm using my phone to record currently, so maybe it is a good asset, but you know what I mean. So what I mean is some of these movable items that can be stolen, that we just want to use it for luxury or trying to feel some sense of belonging. Before you get the next item, ask yourself, am I able to get like 10 times of this, so that you know that you have not arrived, so you know that that expense is justifiable and you are good to go. So guys, always remember the 10 times rule. Next time when you are trying to like tick an expense bucket, tick something you want for yourself just to satisfy your cravings or something, that's desire of yours, ask yourself, am I able to get it 10 times? That your trip that you want to go go and have fun, am I able to give myself this trip 10 times? Then it's not justifiable. So this is the 10 times rule. It doesn't apply, like it's not applicable to all scenarios, but it is a very good life-saving principle for you to be able to manage your expense. Now, finally, the last on my list, the last but not the least, is have a limit on your giving. Remember in my last video, if you watch my last video, I said you should always have limits to how you gift money or how you lend money. So trust me, I am a firm believer of giving. One of my life principles is to give. I have gotten so much benefit from giving, but I also understand that giving could be sometimes harmful if not controlled or if not directed about it. So always ensure that you have monthly limit for gifts that you want to give out. It does not apply to all seasons, because I mean, this season is a season of Lent, where we have to like give more and give more alms. But as much as we want to give more alms, always have some limits, have some checks, and I think that would definitely help your finances. There's nothing wrong with telling someone that you will get back to them, maybe like in the next month, or project it ahead of time. So this would just give you checks and balances on how you spend your money. So guys, I know that some people will be saying that they would have their expenses how they want it, that after all, why would they be keeping or saving, having investment for next of kin? But trust me, there is always confidence and happiness in growth and seeing yourself grow in all aspects of your life, and financial growth is one of them. So it's always good to have all these expenses in check and then look for more sources of income to support. So guys, this is where we'll be bringing our conversation to a close today. Let me know in the comment section, are there other ways to manage your expenses, to minimize your expenses? And I'll be in the comments to either like your comments or contribute to your comments. Thanks for watching guys. Don't forget to subscribe and like this video. Bye.